Have you ever wondered how insurance companies make money? It's a question that piques the curiosity of many. The world of insurance may seem complex and daunting, but it's not as complicated as you might think. Over the course of this video, we're going to demystify the insurance sector, breaking down the ways these companies generate profit, and, more interestingly, how you can tap into this industry to make money yourself. We'll delve into the business model of insurance companies, explore their revenue streams, and shed light on the fundamental principles that underpin this industry. But we won't stop there. We'll also provide a step-by-step guide on how you can leverage these principles to your financial advantage. Whether you're an insurance enthusiast, a budding entrepreneur, or someone simply intrigued by the world of finance, you're in for a treat. Stay tuned to discover the secrets behind the insurance industry's profit-making strategies. To understand how you can make money with insurance, you first need to comprehend how insurance companies operate. At its core, the insurance business model is all about risk management. Insurance companies pool risks to ensure that no individual or entity bears the full brunt of a loss. This is achieved by selling insurance policies to a large number of people or businesses. Each of these policyholders pays a premium, contributing to a larger pool of funds. This pool then serves as a financial safety net, ready to cover the costs of any claims made by policyholders. Think of it as a community potluck, where everyone brings a dish to share. The more people contribute, the larger the feast, and the less impact if someone forgets their dish. Similarly, the more policyholders an insurance company has, the larger the pool of funds, and the less impact if one or more policyholders make a claim. Now, let's talk about premiums. These are regular payments made by the policyholders to the insurance company. The amount of the premium is determined by a process known as underwriting. Underwriters assess the risk associated with insuring a person or entity. They consider factors such as age, health, occupation and lifestyle for individuals, and industry, size and history for businesses. The higher the risk, the higher the premium. But not all of this premium income is used to pay claims. Some of it is invested by the insurance company to generate additional income. This is another key aspect of the insurance business model. Finally, there's the concept of claims. When a policyholder experiences a loss covered by their policy, they can file a claim. The insurance company then pays out from the pool of funds to cover this loss. However, the aim is always to keep the claims as low as possible. And that's where good risk assessment comes in. That's the basic model of how insurance companies work. Now let's dive into how they actually make profits. Insurance companies are not charitable organizations. They are in it for the profits. They have two primary sources of income: underwriting income and investment income. Let's delve into these a little deeper. Firstly, underwriting income. This is the difference between the premiums collected from policyholders and the claims that the insurance company pays out. When you purchase an insurance policy, you're essentially paying for a promise that the company will cover specific losses in the future. Now, if the company collects more in premiums than it pays out in claims, it makes a profit. This is underwriting income. However, it's not always that simple. Sometimes the claims exceed the premiums, especially in the case of catastrophic events or unpredicted risks. So, how do insurance companies handle this? Well, they spread the risk. By insuring a large number of people or entities, they reduce the risk of a single catastrophic event wiping out their profits. They also reinsure some of the policies with other insurance companies to further spread the risk. Now, the second source of income: investment income. You see, when you pay your premiums, the insurance company doesn't just sit on that money. They invest it. These investments can be in bonds, stocks, real estate, and other income-generating assets. The returns from these investments provide a substantial portion of an insurance company's income. It's a bit like having your cake and eating it too. They collect premiums, pay out claims, and still have money left to invest and make more money. But remember, just like any other business, insurance companies face risks too. They have to constantly balance their underwriting and investment strategies to ensure profitability. They also have to account for regulatory changes, competition, and economic trends. It's a complex balancing act, but when done right, it's a profitable business model. Now that you understand how insurance companies make money, let's explore how you can do the same. Now, the big question. How can you, as an individual, make money with insurance? Let's start by understanding that there are two main avenues to make money from insurance. The first is by becoming an insurance agent, and the second is by investing in insurance stocks. Both paths have their own set of requirements, benefits, and challenges. Firstly, let's talk about becoming an insurance agent. This is straightforward yet demanding. As an agent, you'll be selling insurance policies. Each policy you sell will earn you a commission, which is typically a percentage of the policy's premium. And the beauty of it? These commissions are not a one-time deal. You continue to earn as long as the policyholder keeps renewing their policy. Now, isn't that a sweet deal? But it's not all roses. To become a successful insurance agent, you need certain skills. You need to be a good communicator, a persuasive salesperson, and have a knack for building relationships. It also requires a deep understanding of the insurance products you're selling. Moving on to the second avenue, investing in insurance stocks. Insurance companies are often publicly traded, meaning you can buy shares in them. As a shareholder, you stand to gain in two ways. If the company does well and its stock price goes up, you could sell your shares for a profit. Additionally, some insurance companies pay dividends to their shareholders, providing a steady stream of income. But remember, investing in the stock market isn't a guaranteed path to riches. It requires knowledge about how the stock market works and understanding of the insurance industry's trends and financial health. Not to mention, you must be prepared to ride out the market's ups and downs. In a nutshell, making money with insurance, whether as an agent or an investor, requires a combination of knowledge, skills, and perseverance. But the potential rewards can be substantial for those who are willing to put in the effort. Armed with these basics, let's delve into a step-by-step guide on how you can make money with insurance. Here's a simple 5-step guide to making money with insurance. Firstly, education is key. Insurance isn't something you can jump into without a solid understanding of the industry. Acquire the necessary knowledge about the different types of insurance policies, from health to life and home to auto. Understand the terms, conditions, and the nitty-gritty of how these policies work. This knowledge is your foundation, your stepping stone to a potentially lucrative future in insurance. Step 2 is obtaining your insurance license. Each country, and sometimes each state within a country, has specific requirements for becoming a licensed insurance agent. Research these requirements and ensure you meet them. The licensing process often involves passing an exam, so prepare to hit the books. Step 3 revolves around gaining experience. Join an insurance company and learn the ropes. Understand the art of selling insurance and handling claims. This experience will prove invaluable when you decide to branch out on your own. Fourthly, consider becoming an insurance broker or starting your own insurance agency. As a broker, you represent multiple insurance companies and can offer your clients a wider range of products. If you choose the agency route, you might specialize in one type of insurance or offer various policies. Both paths require excellent marketing and sales skills, so brush up on these areas. Lastly, think about investment opportunities. The insurance industry offers numerous avenues for investment. You could buy shares in insurance companies, invest in insurance-linked securities, or even start your own insurance tech startup. Weigh the risks and potential returns before making a decision. Remember, insurance isn't a get-rich-quick scheme. It requires dedication, hard work, and the ability to adapt to changing market conditions. But with the right approach, it can be a rewarding and profitable venture. Follow these steps, and you could be on your way to making money with insurance. In conclusion, making money with insurance is not a get-rich-quick scheme. It's a journey that requires a deep understanding of the insurance business model, the ways insurance companies generate revenue, and the basics of insurance. It's a path that requires you to take calculated steps. You'll have to follow a guide, step by step, learning and applying the principles of insurance to your own financial strategy. The journey may be steady and slow, but it's also rewarding and enriching. Patience and dedication are your best allies in this venture. There's a learning curve involved, and it's important to stay committed, constantly seeking out knowledge about the industry. This is not a sprint, it's a marathon. And remember, continuous learning is key. The insurance industry is dynamic, evolving with every passing year. Staying updated and responsive to these changes will set you on the path to success. Remember, the road to success in the insurance industry is paved with knowledge and hard work. Good luck on your journey.